All right. Today was a relatively flat day, so we'll do a very quick update. And on SPY, it's just as simple as staying bullish above this level at 500 because that's the bull breakout. And you can see today we did test the rising 5 EMA and hold it as support. So if we can bounce off the 5 EMA, it's possible we break to another all-time high and hit the price target up there at 514. But if we get rejected from this previous resistance right around 507 and we break down below the 5 EMA, then we need to watch this support between 501 and 502. And if we cannot hold that support, it is very likely that we will fill this gap down here at 497. So be cautious. We do have another catalyst on Thursday with the PCE data, and there's always going to be volatility around those releases. And while it's not likely going to be a major event to shift the current trend, it is always a possibility that this bull trend is due for a pullback and or a correction, even if it's just simply a technical correction back down towards support. So pay attention to this critical support right here between 501 and 502, and if we break below it, simply get a little more risk off because it's more likely we're going to get a pullback. And if we do break all of this support, it is possible we go down and fill some of these gaps, especially because we're going to be entering some weak seasonality in March, and that could take us down towards gaps at 489 and 483. On the NASDAQ 100 triple Qs, we were up 0.24% today, and the triple Qs also tested the rising 5 EMA as support and did bounce off of that level, and we did close above this level at 437 yet again. Above 437, I still think there's a good chance we go hit this price target at 442, and if you looked at Apple today, it did look like it found support and started to bounce, so it's very likely the triple Qs could go for that next leg higher and hit that price target. If we break down below 437, watch that support at 434, and if we break below 434, we're likely coming back down to 428 and a gap right around 425. On the Dow Jones, we were down 0.27% today, and once more, we came back down to the 5 EMA and found it as support. And in the Dow Jones, if we break down below the 5 EMA, it is a very good chance we will fill this gap at 386. Now, above 386, there is another support I want you to watch right around 388. So 388 to 386 will be support, and if we break that, then we're likely coming back down towards 381 to 377. If we continue higher and we break the previous high just above 391, it is possible this bull trend does continue higher towards 400. On the Russell 2000 IWM ETF, we were up 1.42% today, and this is a theory I've been talking about in the Stocks Channel Discord server where I think the small caps could be the relative outperformers and they could be the strongest sector going into the rest of this year. And one of the reasons I believe that is because there's a very good chance from here the small caps start to break out and start to catch up, and they did not really participate in last year's bull market. With that being said, we need to follow the chart, and right now the chart is telling us we need to break this high at 205 to hit the price target at 207. And if we do break the high at 205, I think we're going well past 207 and I actually think we'll go higher towards 214. Now there is a gap down here right around 201.6. So if we do start to pull back, look for that gap fill as a possible support, but with a bull breakout, there's no reason this gap has to fill now and we could just start to run. If we do get that breakout, look for a very sharp increase in volume, and then we should be off for the races because we do have the bull trend and we do have the market structure to start pushing. If at any point we break 196, the bull trend is over with and we're going much lower, which could take us back down into the low 180s. On the ARKK ETF, we were up 2.92% today, and we did gap up and leave the gap open at 50, but we also have a gap to fill up here above 52.2, and that's actually where I think the price target is, so I do think we're going to go a bit higher. Just like IWM, it's possible this is the start of a major bull rally that could push us to new highs, which would be up here right around 57, and that will be as simple as just breaking through this previous high above 52. That would be a higher low, higher high breakout, and that would be very bullish, and that would push us higher towards 54 and then 57. If we start to pull back and we can't hold above this gap fill at 50, then we're likely coming back down towards 47 to 48. On the VIX, we were down 2.26% today as the VIX continues to crush back down towards 13, and there's a very good chance the VIX will hit low 13s to high 12s by tomorrow and then possibly spike after the PCE data. But as long as we have the VIX below 15, this is still a low fear bull market. On Bitcoin, we're currently trading just above 57,000 outside the upper Bollinger Band, and we did hit through a few price targets here at 55,000 and just below 58,000. And I do think Bitcoin is going to start stalling out here and likely see some kind of weakness. So if you're chasing Bitcoin up here, I think you're in for a world of pain. But if you've been accumulating Bitcoin and simply staying bullish while we have the bull trend, then you're simply going to just continue to hold that position above 52,700. But if you are in long and you're in a heavy position, I would consider locking plenty of profits in this zone because I do think there's a very good chance this could be a local top in Bitcoin as we start to see some weakness and consolidation. If I'm wrong, we should push through 58,000 and start pushing higher towards 63,000. On NVIDIA stock, we were down about 0.5% today, and we came back down to the 5 EMA and found support. So there's really nothing wrong with this stock. We still have a strong bull trend that simply got a little too far extended out right after the earnings report, outside the upper Bollinger Band and at the price target at 816. As long as we're above 740, we have a very powerful bull trend that can push towards 850 next. So it's really just as simple as staying bull above 740. And as you know, I continue to tell you this stock is not worth shorting because it's in a very powerful bull trend. On Tesla stock, we were up 0.17% today, and we got very close to the price target at the arrow, which is the gap fill just below 207. But as you can see, we were outside the upper Bollinger Band, and we're just cooling down as the bands expand. And I still think while we're above 197, we are going to 207. Above 207, we go to 214, and then we go into the 220s, but we need to take this level by level because we still do have a downtrend. In order to get out of the downtrend, we need to break back above 207 and start building up the bull trend, and then we could possibly say that Tesla has reached a bottom and getting ready to run higher towards 230. So take it day by day, and at 207, look for strong resistance, and I do believe we will hit that price target. And if you want to know where to get risk off, that would be the break below 197. On Apple stock, we were up 0.81% today, and Apple is finding some decent support right here at this level at 180. And as you can see, I did draw out this is a potential head and shoulders pattern, but it's more than likely going to be a bear trap, which means even if we do break below the neckline at 180, I do believe the support will hold up between 177 and 180 and then push us higher towards 187 to 190. Doesn't mean I'll be right, but that's what I see from the chart. And today we did get a spike in volume as we bounced off of that support. So there could be a chance we're not even going to break below 180, and this was the low before we start pushing higher. So if you're still looking for a low risk big tech trade, this is likely going to be the one for you because we are still so close to the risk level, which is the support at 180. So jumping back over to the S&P 500, Thursday is going to be the big day. So we still have one more day to get through on Wednesday, and there's no damage to the bull trend and there's no damage to any of the critical support. So there is still a good chance we are going to continue pushing higher to finish out the month of February. Now, once we get to March, there's going to be a totally different story, and we could see plenty of weakness just as we start to get a technical pullback and a technical correction. Because remember, as I always tell you, nothing goes up forever. We always need higher lows before we put in higher highs in any bull trend. So look for a strong finish to the week, and then next month we need to get a little more cautious, and we need to start considering the fact that we could be due for that pullback. We'll take it day by day and level by level, and as always, follow the price action and manage your risk around these critical levels. If you want to come learn how to trade price action and be a profitable and disciplined trader, then you need to come join the Stock Channel Discord server. And you're really going to see how I follow the charts each and every day and looking at the price action to decide the best trades to take so that we can remain profitable and continue to crush this market. You can find out how to join the Stock Channel Discord server by clicking on the link below. So thank you for watching, everybody. I hope you're crushing this market. And as always, I will see you in the next episode.